Alright guys, I promised to do a video to explain my process and method and setup. I have a few basic setups that I trade over and over and over again. Let's start with the parabolic short. What is the parabolic short? Let's take a few examples. It's a stock that gets very extended in a short amount of time. So there's two components to it. You have a percentage move. Preferably it's 200-300% or maybe even 1,000% plus in a short amount of time, like 3 days, 5 days, 2 weeks or something. Something that goes up a lot in a short amount of time, and preferably it goes up on nothing, some speculation or hype or just a pure pump. Take INO for example recently. This thing, like this is what you're looking for. Something that's just straight up with no dips. This thing went up 300% in 1, 2, 3, 4, 5 sessions. On the 5th day. Now this is important. You have to wait. You can't short on the 1st or 2nd day generally. Sometimes it works shorting stocks on the 1st or 2nd day, but I prefer to wait the ones that go up for 3, 4, even 5 days. Those are the best ones. The 5th day, the big euphoric gap up, and then it just tanks. Okay, it had a little bit of push out of the gate, and then it took out opening range lows. Now this is key. Like I talk a lot about opening range highs and opening range lows, and I trade them all the time. If I want to short, opening range lows is usually where I want to short it. And the opening range can be the 1 minute chart, like the 1 minute candle, the first 1 minute candle. It can be the 5 minute candle, first 5 minute candle, or it could be the first hourly candle. mRNA. This one wasn't an opening range lows play. It was more of it was still a range break. Like I also talk a lot about long, tight ranges. So mRNA was another candidate. It's been up 500%. It's a large cap stock. 500% in 6 months for a large cap stock. That's a big move. That's a very big move. So this one I was stalking for a good risk reward setup. Now it did have, I think I even shorted it. I don't remember if I did. I think I shorted on the opening range lows and took a loss on it. But then late day just went in a tight range, and late day it started fading, and that's where you got a tight range on it. $2, risk $2 to make potentially $20-25 on the downside. And that's exactly what happened, just straight down from there. So this was another extended stock, but it wasn't up like 3-4 days in a row. It had just been flagging for a week, and then it gapped up on this news. But it was already pretty overextended. So it's kind of similar setup to the INO setup I was talking about. But it wasn't straight up as violently as this INO. But the key in both of these, you don't randomly short them. You wait for them to actually start going lower. You don't start randomly picking tops. You wait for weakness. So that's why you wait for these opening range lows or mid-late day fades. So it's kind of the same trade, but that variation of the same trade, pretty much. And INO had a exactly similar setup a little bit later in April. Also, it went up 100% in just 5-6 sessions. And then you had this little bit of a peak day. You pretty much count the days. It's up 1, 2, 3, 4. Even on this, even if the candle here is red, the stock was still higher on this day. The candle here is red because it closed lower than it opened, but it still closed higher than the previous day, so it was still an up day. So you have what, 1, 2, 3, 4, 5, 6 on the 7th day, exactly the same thing. Opening range lows was the key. So you wait for that opening range lows because the stock has been straight up, then it triggers, it tried to bounce, and I'm gonna introduce you another concept, VWAP. This is an indicator I use a lot when shorting, only when I'm shorting stocks pretty much. So it tests VWAP, can't get above, holds below VWAP, midday. Similar to what mRNA did, it built a range for several hours, and then it breaks below that, and then it just, you know, fades straight down. Then it went sideways a little bit for a few days, and then it had another leg lower. And I should also mention I'm mostly a swing trader. I don't do trades for day trades. When I do a trade, I do it to hold for several days or weeks if I'm short, and generally for weeks and months if I go long. So let's look at some mean reversion long trades. See, one that I remember I had a really good trade on was on GBTC. This is a Bitcoin ETF back in December 2017. Now, you should already recognize this setup here. You have something that's up hundreds and hundreds of percent in a short amount of time. Has a leg higher, goes sideways, has a leg higher, goes sideways, another leg higher, then it goes up a bunch of days in a row. It pretty much doubles in a week, and then you had this blow off day, and you get VWAP fails, and then it just starts fading, and you have a set risk reward. But I'm gonna talk about this bounce now. This is similar to the short setup, the mean version of parabolic short. This is the parabolic long. The same concept. You have a stock that's down 40, 50, 60%. In this case, it's down almost 70% in 1, 2, 3, 4 sessions. On the fourth day, gaps down big, has a washout, a little bit of a washout, goes a little bit lower from the open, and that's the same thing. GBTC was actually a little bit choppy. Now I'm gonna show you guys on this day here when it peaked and when it started the big decline. Okay. So it was a little bit choppy intraday. It was weak at first, it gapped down, but then it went straight up, reclaimed VWAP. I don't have VWAP on this chart, but it reclaimed VWAP. Actually took out the previous day's highs, and then midday it peaked. It it went below VWAP, retested VWAP, and then it started fading. And that's when you have a set risk reward, because you know a lot of stocks, they start fading in mid-late day, especially these momentum stocks, and that's where you have a set risk reward. You don't have to guess where the top is gonna be. And then it faded 70% almost in 4 or 5 days. And now this day here, this is the 5-minute chart, okay? So this day here is the day it bounced. This is that day. So it's like you flip the chart, right? It's the same trade, but on the long side. It's extended to the downside, and it starts putting in first green candle. Like this is also something I talk about, the first green and the first red candle. Something that gets getting really overextended on the downside. You wait for the first green 5-minute candle, okay, before you buy. Then you can use the low of that candle as a stop. So you add a little bit, then it takes out the opening range highs. That's where you add more and go straight up. And then the next day it went up another 20-30%. So these are the mean reversion trades, the parabolic short and the parabolic longs. There are many nuances to these trades, but these are like the most important concepts of these trades.